on Facebook. Let me adjust
Welcome in,
my.
everybody. Welcome in. Happy Monday. Another day of learning. I'm excited. Mark's here to drop info for you guys. If you guys don't know, uh, we're part of the seller financing community. Got a Facebook group. If you're not if you're over out here on Zoom, you don't know what coaching call this is. This is a free coaching call we do every week where we teach seller financing. We are in Seller Financing Homes, the Facebook group over on Facebook. I think it's about 170,000 people, right, Mark?
Yeah, we're almost at 174,000. It's been growing pretty rapidly, so it's good. So a lot of great value, but some of these people actually might have also joined because we gave a free book giveaway this weekend, and we had over several hundred people grab a copy of it. So if any of you guys grabbed a copy of it and you guys are here joining, I really appreciate you guys, and I'm excited. So get ready to bring your questions, and we'll kind of go from there. Matt, I can't see the comments over on Facebook, so you're gonna have to keep
I
an eye
got you.
over there as well. So we're live on the Facebook side too in the Seller Financing Homes group. Matt, how was your holiday? How was your fourth?
Very laid back, very simple, just chilled. I didn't even do what I normally do, which is set off fireworks. I just sat back and went to Kings Island, the amusement park next to me, and enjoyed theirs. It was packed.
Nice, nice. So I was in Lake Washington, outside of Seattle area, but I didn't stay because the daylight is so different. They weren't setting the fireworks off until like 10:15. But I was like, we're up boating all day, beautiful. And the next day we end up driving 7 hours up. I'm in up in Canada, so in between Vancouver and Toronto, in the middle. So about 5 hours from Vancouver, heading east. So weather's beautiful. Did a great hike this morning. As you can see, I can't open the window because if I do, then my whole lighting gets screwed up. But sitting right here on the water, it's just absolutely stunning. So I'm excited. I'm sure you're going to ask everybody where they're from. So I'll let you go ahead and.
Yeah. So actually, if you are over on Facebook, I actually just dropped the link for you right now. So if you're over there, feel free. We're on Zoom where we can actually have a dialogue back and forth and you can ask questions. But first, where's everybody tuning in from? I'm here in Cincinnati. As you can hear, Mark is traveling. He's out in you said Canada, right?
Correct. Yep. Up in British Columbia, Canada. It's
British
a little
Columbia.
I'm actually in a lake. It's about 90 miles, but it's an Indian name. Don't ask me to pronounce it.
Awesome. All right, we got Oregon. Awesome. Chicago. Awesome. What? Let's see. San Antonio, Texas. Yes, prayers for all those down in Texas. Man, that's we got Texas and North. Is it North Carolina again? Flooding. It's Texas is really bad, and then North Carolina started yesterday. So
Is it?
man,
I'm out of the loop in the news down there.
yeah, yeah. Did you see the Texas stuff?
I didn't, but I've been hearing. I see highlights, notifications that come into my app, like I have a news app, but I haven't watched any footage. I haven't seen anything. But from what they're saying is the campground wherever these people were swept away, the same thing happened in the 80s, the exact same spot where a lot
Yeah.
of people were swept away. It's crazy.
Yep. Same river. Yep. It's crazy.
Prayers to
Yeah,
them
prayers
all. So,
prayers to everybody there, and yeah, it's over 100 now that have passed away,
wow.
unfortunately. So, yep, it's a
Sad.
crazy time. I watched some of those videos. I'm like, man, that water got up quick. So, what do you? So when it comes to investing, I just want to ask you a question about it. When it comes to investing, are you looking at like how close a property is to a river to gauge that flood zone?
I do, but I don't let it stop me. Look, I'm in Florida, so I'm in Hurricane Central, so I can't let it deteriorate me. And so I just make sure, I'm insured. The bottom line for me is I look at my numbers. So I want to make sure it's insured, and then I want to make sure whatever the insurance is covers my numbers for me to cash flow. That's what I look at. And if I sell it like on a seller financing or a lease option or rent one of those to my end buyers, I want to make sure they have the insurance as well. So that's kind of how I look at it. I'm not going to allow it to deteriorate me. I look at more of the numbers, more of a business point of view of things. I um don't look at it as that because I mean the whole globe is technically, no matter where you're at, you have some type of natural disaster wherever you're at. I mean, I remember years ago up in Vermont, I mean, we never ever, where I'm from, never since in my 50 years, never seen a tropical storm flood a whole entire and just move houses in 50 years. So I can't allow something like that to deteriorate me. So I don't let it slow down. I look at more of the opportunities. I look more of the numbers, and I like to look at the growth. Like I like to look at job growth. Like under the CHIP Act, I've been really focusing on a lot over the last few years of where these new factories, and all these companies. So I look at the political environment, like whoever's in office, what are they doing? Are they, whatever they're looking at, like, the last administration, they're big on EV. So a lot of that stuff. So we actually ended up buying 4 mobile home parks in South Carolina because it was near BMW's largest EV plant. So that was one thing. Now this administration's got a lot of jobs coming in, a lot of money coming in where jobs are going to be created for different things of different businesses like Apple, the cars. Um, so I look at the job growth. That's one of the biggest things I look at because I want to look at making sure that there's going to be enough people in the area. And I also look at the minimum size of the area. I don't like to go out in rural, especially if I'm buying through seller financing, because if you're buying through seller financing, you can get a property in a rural area, but the problem is it's going to be hard for you to find a tenant or a buyer to put into that property. So, and then I always look at whatever the median price range for that area is. I go 20% above and 20% below because that's where the main buyer pool is. So let's say, for example, if it's $250,000 in minimum price range, my max is 300 and my low is 200. I will look at things below 200 because it could be in a nice neighborhood. It just needs the house needs work or a BRRRR method type of thing. But if it's in a war zone, then I'll pass on it. So, I'll give you an example. So say the median price range is 200,000, my max 300. I can get an easily a 475, 450,000, $500,000 home in that area, but the problem is it's going to be hard to find a tenant buyer. So you're going to end up carrying that cost. So that's kind of the reason why I like that sweet spot because the property will go much faster. And how I do my strategies, I like to have my tenant buyer use their capital for me to buy the property. So I like to negotiate with the seller, get a really low down payment as much as possible to almost zero, whatever. It goes back to listening. And then I like to go out and give myself a long inspection due diligence period, go find my buyer, my tenant buyer, and use their capital to buy the property. That's how I like doing my strategy. I mean, there's so many different ways of doing it. Another way you can do it, and we talked about earlier on our group Monday night coaching call, that there's another model a lot of people like using is they do seller financing notes. So when you create these and you create notes, you can sell the note off and then use that capital to buy more property. So there's a lot of different ways of kind of structuring that once you understand how to find the sellers that are open to seller financing, how to structure them, start creating the cash flow. For me, I like to hold my notes and hold my deals because I like that passive income. But then there's ways where there's some of these people will end up giving the seller too much money up front, and they give the seller too much money up front. So it makes it a little bit more challenging sometimes where you get capital. So I like to structure in a way where I negotiate really low with the seller and use my end buyer's capital. These guys out there, a lot of the guys are doing wholesaling slash assignments on subject twos and all these deals, but I'm thinking to myself, you guys are leaving so much money on the table because you're just looking at doing assignment, making what, $10,000 on an average, maybe a little less, maybe a little bit more, but in that area. But if you hold these deals, you're making well over $100,000, possibly $200,000, because you're structuring it, making money up front, making the passive income, and then you're getting your percentage in the back out whenever you structure that deal, 5 years, 7 years, whatever it may be on the back end. That's what I like doing. Now, I do hold some multifamily. because I like property managers, but I like nice homes, nice neighborhoods where there's like near nice school districts. And I like those homes a lot because of those homes, because your tenant buyers treat it as their own and they want to become homeowners. And it's just, I like it. It's a good feeling that helping people become home ownership. But you're making money on structuring that deal. You're making money up front, you're making money passively in the middle, and then you're making money when they pay your loan off or your lease option, whatever your exit structure strategy structure is. So yeah, I'm excited. So cool.
Awesome. And guys, this is a time for you to ask questions. If you have questions about seller financing or investing in general, please do not be scared. There is no there is see I can't even stop talk. So there is not a stupid question. I might be stupid when I talk, but there is not a stupid question. So feel free, do not be scared to ask. Obviously, I can't even talk. So I mean, Mark's going to do all the answering when it comes to the questions. So, uh, so feel free to drop it in the chat, raise your hand, unmute yourself, and start speaking. We'll do one at a time. If you raise your hand, that puts it in line. That keeps it a little organized for us.
Yeah. I
But
got a question. I'd like to know, has anybody here done a creative seller financing deal? So when I say creative seller financing deal, it could be, it could be subject to, it could be an agreement for deeds, sandwich lease option, land contract. Has anybody here done one yet? All
Steve,
right,
yep, yep. See,
nice.
Creamy, did you unmute yourself? Have you done one before?
No, no. So we tried. We our market is Pennsylvania and Chicago. But we do a lot of deals in Pittsburgh and Philadelphia. So we tried a lot to do in Pennsylvania, but maybe it's the approach or something. But it's they treat it like a land contract, but it's not that favorable in Pennsylvania. So
Okay.
Okay.
So what you cut out in that last part, it's not that what in Pennsylvania?
not that common. It's not that well received. It's like they treat it like a land contract.
Yeah, you had the reason why in Pennsylvania, it's starting to come back around, but what happened was there was a large company not structuring that the right way and taking advantage of people. It was a couple years ago. They were doing a lot of stuff and they got in a lot of trouble that so the state came in and really freaked out a lot of people. But if you do things the right way,
Right.
and they might call it something different, like a they might call it an installment sale, contract for deed, a bond for deed, or agreement for bond. So they call it different things a little differently in other states. But you can still do them. I don't know what they actually call them in Pennsylvania. Actually, I want to double check that. What do they call those in Pennsylvania? Give me 1 second. I
Yeah.
like to pull up chat sheet.
You muted yourself, I think.
He was asking
All right.
ChatGPT how to.
Oh, okay, okay, okay.
I'm asking what they call it there. So Pennsylvania, they call it commonly they call it installment land contract in Pennsylvania.
Oh, okay.
Um, yeah, so that's what it's called, installment land contract. I like those a lot, especially buying properties. I like those a lot, and then I usually will sell it on a lease option. Um, Typically, are you familiar with what a subject to is?
Yeah, I know that.
So for me, I will never go in if a seller's not financial distress. I'll never go in and pitch a subject to. They're gonna look at me like, "Hey, Mr. Seller, keep the mortgage in your name, transfer deed it over to me." They're gonna look at me like I'm crazy. So I'll go into it using like one of those strategies and structure it, because you can structure it in so many different ways. You can have your attorney structure it, but I like to structure it where I also get the depreciation, the tax advantages since I'm paying all that stuff. So that's kind of why I like that. And then what I typically will do is once I pick that property up, I will turn around and sell it on like a lease option. Sometimes I may structure on the same. I may sandwich it or wrap it on the same type of contract. It depends on the state, because some states, like New York, like a lease option, sometimes can be challenging because if something goes bad, to evict them.
Yeah.
But I'm really good at underwriting my buyers and really trying to put the right people in there. Yes, sure, you may have some hiccups here and there, but if you do it the right way and you make sure they're putting enough down payment, so there's some skin in the game, you usually don't have a problem. A lot of times where people, will put a down payment. And the other thing is you got to look at if they're putting too much down and you evict, you could look like a predatory too, because you're taking advantage. Like I see some of these people saying, "Oh, I want $50,000 down on a lease option." Well, if they're putting that much money down, then you have what's called equitable interest. They need equitable interest, so you have to technically kind of almost go through. So you got to be careful of what state and how much money they put down. So if they put less than 10% down, typically I'm doing a lease option. If they're doing more than 10% down, then typically I may be doing agreement for deed to my buyers. Because the more money they put down, the more I make in my pocket in the front end if I negotiate it the correct way. So that's typically how I structure mine. Is I like buying through seller financing, sell through seller financing, and create the arbitrage and make make money up front, cash flow, and at the back end. That's typically how my structure is on that. But there, you can do them. I like to go direct to seller. You can find some realtors that are familiar with them. Um, Typically, I always go into, and I always use this line is when I'm calling sellers or we're speaking to sellers. Would you be willing to rent the property to us for a few years? Then we close on it. We'll take care of the maintenance and repairs. If they say yes, then I know they're going to be open to some type of creative financing terms. So then at that point, it's just digging deeper in why they're selling, what are the issues, then kind of like start massaging it once I build a rapport with them. So that's a simple question. Keep it simple and easy. Dumb it down and kind of avoid that. How do you avoid Dodd-Frank? You don't avoid it. On a lease option, um, you technically don't. When it first came out, Dodd-Frank said yes, lease option fell into it, but now everybody's saying it doesn't. All the attorneys and regulators, so it hasn't been an issue. But um, if you're doing agreement for deed, then Dodd-Frank falls in. I always like to use a third-party RMLO to look at my deals and underwrite because like even on lease options, even though I don't need to, I still run it through them because I want to make sure that they're following the loan officer's guidelines. So whatever your term is, 3, 4, 5, 7 years, that they're going to be able to buy that property because I want them to buy that property because I want my money back out and be able to deploy it into another asset. So Dodd-Frank is just one. You have RESPA, you have SAFE Act, you have state. So there's a lot of different consumer protection regulations besides Dodd-Frank. So you need to make sure that you understand them all and just follow them all. But for me, I always follow them so I don't have to worry about it, especially when you're doing a lot of volume and you've done a lot of deals. Just do things the right way so you don't run into those issues. I have no problem using a licensed RMLO. My buyer's paying it. But in the beginning, if you're doing even a lease option, they're just kind of underwriting doing a quick screen because they're end up going at the end of that term, that loan officer is going to get the deal where they can end up when they buy that property on my lease options. Like we're doing one right now in Alabama. Actually, I was on a Zoom a little earlier, and we have to wait another like 8 more days for the wife to get another pay stub because she got a new job. We are supposed to close before July 1st, but because she transferred jobs, we had to wait a little bit longer, and hopefully we're going to be closing on it probably at the end of this month. So, and that was a lease option. So I think you should always follow the regulations. It makes it easier. Don't take shortcuts. Just do things the right way, and you don't have any problems. And you'll get a better name for yourself. You just always want to do things in up and up. And I can't tell you how many times like I could have easily taken a deal down, but it didn't make sense from the sellers. And I educated the seller and said, hey, why don't you try this or this and this? I didn't get the deal, but they end up referring me business. So just deal with Dodd-Frank. It's part of the game. That's why they're there to protect that consumer. Now, you could technically sell that to another investor. And then if you sell it to another investor, then those consumer protection regulations like Dodd-Frank don't apply because the investor is. But I usually like to sell mine to homestead buyers. You can sell to investors as well, but because to the end buyer, I like to make a little bit of a premium because I have to wait to get my capital. And I like to hold my deals. So that's kind of my model on that one. So, all right, great questions. Bring more questions. That was a good one.
Yes, for sure. Bring questions, raise your hand. Um, Over on Facebook, we got one. How do you protect yourself as a buyer in a seller financing agreement?
Well, It's funny how people always say my contracts will protect me. I got the best contracts. You know, these wholesalers, no offense, wholesalers, but I'll never get sued. I sign all my rights over. It doesn't, technically, it doesn't matter how strong your contracts are. If they're going to sue you, you're going to get protected. You're going to get pulled into it. It doesn't matter. You just want to do the right thing, show the intent. Um, depending on the state, I mean, your contracts could be solid, but the judge could look at you as the big bad wolf of the investor, and they're like the seller taking advantage. So even though your contracts could be strong and solid, it doesn't, they could still they're going to go, the judge is going to rule how they want to rule. It doesn't matter. Yes, you have some language in there if you have a good attorney, but I can't tell you how many times I've seen a judge overrule the contracts on stuff like that. So just do the right thing. You do want some good contracts, 100%. You always want to have an attorney review some of them in your state, wherever you're doing that. And just disclose. And what I tend to do now is I always use a third party. So it's if they're closing the documents, the third party is explaining everything. I get stuff documents disclosed. And I even nowadays, oftentimes I'll do a Zoom and record it and have a paper trail, make sure, because I've had, not, it's been a long time, but I had people, oh, I didn't know that. They never told me that. And, you will get some of them that may take advantage of you and try to lie and get through. It's happened, but I'm just very transparent, direct. And if you do a good enough relationship with your seller, or buyer, and you guys just talk things through and just communicate, and just document it and just create a paper trail. It can happen and it will happen. I'm not going to say it doesn't, but I've been through it enough where, I had this one like, you know, I'm very level, easy going, but I had this one just get under my skin because she just kept lying and lying and lying and just like, so at this point, I'll just let my attorney take it over and back away and let them handle it. But usually I like to try to do cash for keys if it's a state that's not landlord friendly, or just work something out. I'll help people out. Like we have one right now where the guy, we sold the property on agreement for deed, and he had some type of disease. He lost both of his legs, so he's waiting for his um, government money to come in, and he's fallen behind in his water and taxes. He's been paying us the mortgage, and it's a duplex, so he's making money off of that, and that's what's been paying us. But he worked on an agreement with the city, and the city's like, you know what, we're willing to do a payment, but we want $1,000. So we're willing to allow him skip August's payment so he can bring up the city. And so he's been good. He reached out to us. We have a good relationship. So we're going to work with him, and we're going to skip a month's mortgage payment on that. So, if you help them out, those little things, they'll go a long ways. Even like your employees, you help an employee out. Like one of my employees was sick, one of my VAs, and he was going to make it. I said, you know what? Don't worry about it. It's a holiday. Just enjoy yourself with the family. You do those little things, they'll come back to you in return. We got a
Awesome.
question.
Yes, Nadir, what you got? Are you able to unmute yourself and ask?
Hello, how you all doing?
I'm doing well, and you?
Good, doing well.
Good, good, good. I hate typing anyway, so I guess talking is better. Um, so like the contract for deeds or whatever, you know how it is when you wholesale deeds. What do you think about that?
I think it's no offense, but when you wholesale, it's a grind. You got to keep grinding and grinding and grinding to get the next deal. Staying in the deal and doing it the right way, I
Sure.
can do I can do 3 to 5 deals a year and make as much as a wholesaler doing 25 deals a year
That's what I
because you're
like.
building.
What is that?
Yeah,
I'm sorry to interrupt you. Like commercials, apartments, all the above. What?
I usually teach residential, but residential. I'm just using residential. But yes, you can do 3 to 5 deals a year because you're going to build up that cash flow, and you have that cash flow coming in. You don't need to keep grinding it. Like I'm traveling right
Sure.
now, and I have that passive income. But if you do it the right way, you're making the same amount of money on the front end wholesaling. I use the same scenario with this one of the girls, Angela. She was in my program, and she's done wholesaling for 5 years, and she had a deal. It was in Texas. and it needed roughly about it needed $37,000 worth of work, but she
Wow.
didn't have it because her capital was tied up in a fix and flip. So she said, all right, I'm going to just do an assignment / wholesaling on this deal. It's a subject to. I'm like, okay, what are you going to ask for? She goes, I'm going to ask for 15,000 on it. I go, when it all said and done, what do you think you're going to get? She goes, I don't know, maybe $8,000 to $10,000. So we went through that whole entire structure. In over 5 years, she's making $171,000 in that deal. And because we marked it as a handyman special, we negotiated and whatever, she still made $12,000 on the front end from the down payment from the buyer. She was making 700 and I can't remember, 750, 775, something like that monthly, over 60 months. And then on the back end, she was getting like another 90 something $1,000 on the back end. So when you calculate it all out, she ended up, it might even been more than 90,000. But she was making $171,000 projection on that deal. And she still made the same amount of money up front. She was going to take 8 to 10, but she ended up getting, she made 12,000. And then staying in that deal, she's getting some capital into it.
Okay.
So that's me. I will wholesale a deal, but I don't very rarely do it. And if I do wholesale a deal, oftentimes I'm wholesaling it back to the seller
I
because
got you.
I tell the seller, hey, I'm not, and these are educated sellers, I'll wholesale it back to the seller. And I've done those before. And I tell them, like, for me to be in this deal, I need this type of money for my monthly cash flow. And I've had sellers bring their payments down because I need I had one where she was open to a deal like this. And for me, she wanted $2,500 a month, but for me, I need to be like I think it was like 2,100. I think it was 26, because I look for $500 a month on this. I said, I'm not the right buyer for you, but I can kind of help you out, be a buyer, and I'll sign it back to you if anything happens. I'm not going to be in the deal. For me to be in the deal, I need to be at this type of monthly payment, because I told my buyer, or my sellers, if my buyer stops paying, I step up to the plate and I make the payments. So she said, you know what? I want you to stay in the deal because I feel comfortable with you in it. So she dropped her payment down to where my numbers need to be. So I ended up getting the deal, and I ended up using my buyer's capital to take that deal down. So it worked out great. So if you build a rapport and tell people where you need to be, and I don't lie, I'm straightforward and I tell them exactly what I'm doing, what my structure is. Hey, sure, sometimes they may do it on their own, but I don't care. I just want to educate and be upfront with everybody on it.
Do
So,
you do
but
one-on-one mentoring?
I do, but we do a group session too. We do Zooms 4 times a week, but Matt will drop a link in here and why don't we set up a call and we can talk a little bit more about it, and I can
Yes,
go
sir.
over some
Yes, sir.
stuff. Okay.
Sure, sure, sure.
But yeah,
Thank you.
yeah,
Thank you.
we can do stuff like that. But yeah, I mean, that's the way to go, is for me, is like, you're better off staying in the deal. And if you're doing, if you do, you can set it up in a way doing seller financing, and you can be generating easily $15,000 a month in cash flow, and not busting your ass like a wholesaler.
No, that
Wholesalers,
I
like,
like the way you think, sir. I like those how you said it like that. Everybody's been telling me that. Oh, 2, 3 deals, and just take off for a year or whatever. Basically, yeah, I like that.
yeah, I
Yeah.
mean, yeah, you can do it. You just got to do the right deal. And the key to it, this is the key. It's when you're doing these deals, when you're having that conversation with the sellers the first time, you have to treat it like a marriage. You're in a contract, you're in a commitment with these people for whatever term, 3, 5, 7, 10 years. So when you're building that relationship with the seller, think of it with your spouse or your significant other. You're getting to know each other. So 80% of my phone call is I want them to get to know me, and I'm also getting to know them. I want to make sure they're not a crazy seller, because I've had those. You know, the equity payment, the payment's due on the first. I had this lady, it's the 18th. Where's my money? I'm like, your money's still like a week and a half away. It's coming. So I do, and I've turned people away. I've walked away from deals because I knew the seller was going to be a headache,
Oh,
even though
I
they're open
gotcha.
to stuff like that. So,
Gotcha.
but I set the right expectations so they don't expect certain things, and I'm detailed on everything, and then I make sure the third party title company, whoever's handling it, goes through it, or the notary goes through it too. So yeah, we'll jump on a phone call. But if you have
Yes,
any
sir.
more
Appreciate it.
questions, yeah.
You'll
Thank you. Not for right now. No, thank you again.
So I actually just dropped the links for everybody to go on, and you can schedule a call. It won't be with Mark directly right away. It'll start off with either Alex or Reese, and then I'll hop over to me. And then we'll figure out if the programs are right for you. We want to make sure this is a good fit for you. We just want to make sure that we're not wasting your time, and you're actually able to go out and use what we're offering. Um, Not everybody's ready. I'll be honest, not everybody's ready. So we just got to make sure that you are ready to go out and invest. Um, and we want to make sure that we can set you up for success instead of failure. So I put the link there. Go ahead and schedule a call. It is right there under the
So,
chat over on Facebook. I put it over there as well.
so a little bit about me, just so you guys know, I've been at this for 30 years. I started in 1995 doing real estate banking. Ended up having up in the Washington D.C. area, I had 107 loan officers work for me, and I had a team of underwriters. So I understand all these different types. So there's so many different types of seller financing strategies, and it really comes down to listening to the seller and depending on the seller's needs. That will. So I think of a tool belt, depending on what the seller's needs are, that will determine on what my seller financing strategy is. Not every, so you kind of massage it and understanding what the seller is and kind of craft it. And it's really listening to the seller and understanding what the seller's needs are and how to solve the seller problem. You know, I had one not too long ago where this guy was open to seller financing and he wanted $30,000 down, but it didn't make sense to put $30,000 on his home when you could go to get a DSCR because he was only asking 128,000. Well, what I found out was he needed he needed $25,000 for a camper and some spending money. And it was for sale for 2 months. And I found out where he was going. He wanted camping. So I took him visualizing him camping, what his life's like. And then I came back to him. He had over 12 offers and everybody was beating up on the down payment. And the bottom line is because we built a good rapport and I got to know him and he got to know me and he had good credit. He banked with a credit union. I told him to go take a loan out at the credit union for the camper, and he for the $25,000. And on the 20th of every month, we'll automatically have the funds pulled out of our account, sent the payment directly to his credit union. And then what we did is in the portal, we created Gmail just for that property. So whenever there's a notice that goes out, it goes directly to him and it goes to my bookkeeper. So everybody's on the same page. So we got that deal for $3,500 down and we're cash flowing still $475 a month on top of him getting the money for the camper. So because I listened and I figured out his problem and I came up with a solution while everybody else was just beating him up, all these other investors. So that's just one example. Any more questions? Let's dig into some more questions.
Awesome. Yes,
Yeah.
more questions.
Can I ask can I ask one question?
Yep, go
How you
ahead.
doing, man?
Let's see. My name is Steven. I'm in Chicago. Honestly, I have done tons of deals, but in terms of the self-financing, what's the best way to explain self-financing to property owner? If the property is like a rental property, usually I'm gonna say, if you do some self-financing, maybe you can get some benefit. You don't need to pay such a big amount of capital gain tax right away. Well, what's your best way to explain self-financing to the owner?
Sure. I love tired landlords. And I'm sure you've probably worked with those. So I like people that have owned the property for 12, 15 years plus because they like that passive income. They've been owner and they don't want to get hit with the capital gains. Usually if it's an investor that have owned it for 5 years or less, there's no meat left on the bone. They're greedy, they're taking it and they're rolling it. But typically what I do on all my offers, when I'm doing like a letter of intent, I'll do like the structure cash, seller financing. And I use this all the time. I do an amortization schedule. And I will send over I had one in North Carolina not too long ago. They had to move for job relocation and they couldn't sell the property. So they're open to seller financing. So, but they wanted a 3-year term. For me, I'm willing to pay top dollar, but I want terms. And in this market, my minimum is 5 years. If it's going to be less than that, then I'm going to do a lease option because if the equity's not there, I'm going to be able to walk away. But what I did is I sent them an amortization schedule, like at a 4% interest rate over. And I said, hey, let's use this scenario. Look at this scenario. Look how much money, my purchase price. I'm putting this much money down. The amount finances is this amount of money. Okay. I said, go down to line 120. That's 10 years. How much money would you have collected? I had them say the number. Over to the right, there's a balloon amount. What's that payoff amount? How much is that? I said, add those two numbers together. What's that come to? And you're selling a property for this much? They're making an extra $179,000 becoming the bank. Because of that, they said, all right, I'll do it for 10 years, because they, instead of deploying it, and then you want to sorry, I'm having a brain. You want to separate your assets instead of having your assets just in the market. You want to splatter it around in different places. I'm trying to remember the terminology. I'm having a brain fart right at the moment. But usually, that is the best way how I go about it, is just giving an amortization schedule and show them. Because a lot of times you can say it over the phone, but people want to see it and visualize it. It's, the senses. So I will go down and explain it to them. And I use the calculator. It's like $5 to get it on an app store. And it's called the 10BII calculator. It's an app. And in there, you can actually produce an amortization schedule in seconds.
Right.
So that's what I do. Is that what do you do? How do you present it to your sellers?
Yeah, it's very similar. But if the owner is very motivated, usually I'm gonna don't give any percentage as an interest. I'm gonna give the $100, $200 a month, and so that you can get the huge principal pay down in a few years. But if
Yep.
I try to
On
get
this,
if I try
yeah.
to get a nice property for a longer term, I can give some few percent of the interest.
Yeah.
But anyway,
I
almost
usually will give, yeah, I
so-
usually, depending on the seller, but I will usually give them some interest so they can make money. If that's the angle, again, I go back to listening to the seller and what it's the problem. And not, like you're saying, not all interest, I'll do some with no interest. But again, I'm listening to the seller, and if they're educated, and they're on the fence, I will show them how much money. Because for me, I'm looking at my cash flow. That's the bottom line. Is just listening to the seller and solving their problems. And the other big thing is, 70% of my deals, 70% come from follow-up where I present an offer
Mhm.
and they're like, no, 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 I want it. In their mind, they're trying to sell it traditionally and they're not getting anywhere. So I have a good CRM and we do a follow-up, and the CRM must follow up. So 70% of my deals come from that. I had a deal that I presented 18 months ago and it just came back around because they were trying to sell, and now they're feeling the pain. So I'm like, well, my offer's changed a little bit because the market shifted. So I dropped the price a little bit, about like 20 something $1,000, because that's what the price point is. I'm like, well, because of the market, this is where I'm at now, you know? So, but yeah, I listened to the seller. They're in a little bit more pain at that time. So I look at my numbers. That's really what it comes down to. I want a minimum of $500 a month cash flow, unless it's in a market like where the average price is 150, 200,000. You're not going to get that, but you can. I've done it before. I mean, I purchased 13 units with 0 down. And that's the other thing. I have over 600 bird dogs that I've built up. Bird dogs are like referral sources, like trashmen. And anybody got my book, they saw that. Trashmen, landscapers, snowplow removals, Uber drivers, pest control. A pest control. He was at one of my properties 2 months ago, and is now referring me deals. I'm getting deals coming in. We just locked one up. So pest control. But where I get my best deals, my home run deals, are through hospice nurses. That's where I get my big ones.
Cool.
So, and I don't have to sell. They're just calling me up and referrals. So those guys, I'll pay roughly about $2,000 to $3,000. The hospice nurses, the trashmen, I'll pay roughly about $500 to $700, depending on the size of the deal, because we have to chase the sellers, do all the work. But hospice nurses is just lay downs. They're calling me up. Those are where my best deals come from. I just did one not too long ago, 0 down, 2 months of no payments, because I got to get the property. They lived in this house for 30 something years, and I said, just leave everything. I give a cash offer or seller financing. Typically with hospice nurses, what I find is if there's 2 spouses, they like seller financing because they want to make sure that there's monthly income coming in for their spouse, their other part, their other partner. If it's one spouse, usually a lot of times they'll go the cash offer because the kids are telling them, take the cash offer because the kids want to go to Vegas. They want that money. But I've had it in a way also where, and then what I'll do is if there's equity in it, I will go ahead and on the mortgage, I will put their mortgage into a trust, a family trust. So if anything happens to them, it doesn't have to go through probate. It automatically goes to the beneficiaries of the heirs. I have several properties like that now where they passed away, even a subject to, they passed away because I put into a trust. I made sure all their other assets were in a family trust, and it's really cheap. It's less than $500 to set something up like that. Have your attorney or title company, and then they will. So they don't have to go through probate, because that's where a lot of times if they go through probate, that's where the lender can pick up and, oh, there's a due on sales clause or something on those nature. So, but pleasure. Where are you located, Steve? What part of the country?
I'm in the south side of Chicago right now. I'm buying lots of property in the Chicagoland, also northwest of Indiana and Ohio.
Yep,
Uh,
I get it. It's good
Can I ask,
markets.
can I ask one more question?
Absolutely.
Okay, thank you. Okay, when you do lease option to purchase, sometimes we are talking about sandwich lease option, but I had only one case, but when we have a lease option deal and then we lease option to another buyer, then once they say, yes, I want to exercise option to buy, you are not owning the property. Then they try to get the loan approved and they find out I'm not the owner yet. How did you deal with this? The time I just bought in cash and then I got the deed. Then
Yeah, I tell people straight up exactly. I have an agreement with the seller, and this is how the reason why you can buy it this way is because I structured it this way and made it a win for everybody. So it's a win for the seller, a win for you, and I make a little money in between because I want you to become the property owner. I'm straightforward. I don't have it as a problem. I
you're
tell them
gonna,
exactly how I'm doing it.
you're gonna buy before
Yeah,
they exercise the option, or
yeah.
you're gonna assign the end buyer to the original owner.
Well, yeah. Well, no, I stay in it. Sometimes I'll end up doing a double close,
Okay, all
depending
right.
on my spread.
I
You know,
see.
I'll close with a, and sometimes you can do an assignment at the end. It depends on the spread. That's really what the spread is. Because, if it's a big spread, like I did one where I locked up for $100, and when it's all said and done, I was going to make another $50,000 on my spread on it. And I didn't want my seller and buyers really, because my seller may end up having, oh, you're making this much money. So I did a double close on that particular one. So, which is fine. You know,
Yeah.
I don't mind it. It was a win for everybody. I did another one. Um, I did another one where it was such a huge. What was this one? Oh, the property. So I had one person, my end buyer. I sold it to him for 204. I bought it for 179 from the seller. Sold it to my tenant buyer for 214. And my buyer was supposed to notify me in my contract 90 days before if he's going to purchase that property. Well, day 45, I reached out to him like, hey, are you going to buy this property? Because your option's coming up. And he's out of contract technically. He goes, yeah, yeah, yeah. So I sent him back to the loan officer that kind of oversaw him, make sure that he did. And so that when that appraisal came in, now I sold it for him at 214,000. That appraisal came in at $264,000 for my buyer. I could have been a jerk, like, hey man, you're a breach of contract, but I honored it. They were good people. And so it was a win for him. He got 50,000. I made my money and the seller. So it was a win all the way across the board on that one. So
Right. All
yep.
right. Thank you very much.
Cool. Pleasure meeting you.
Thank
More
you.
questions, Matt?
Awesome. Yes, we have more. Well, we have a few. Is this being recorded? It is being recorded over in the in the Facebook group, Seller Financing Homes. So if you need a link, let me get the link for you. I'll actually get the link directly to this. Here's the link to that right here. There it is. Oh, nope, that's not the right link. All right, let me get it one more time. It did not work. Copy link. Nope. All right. I'll get the link by the end of the call and post it in here. But Seller Financing Homes, just go over on Facebook and it'll be pinned at the top. That way you can get access to it. So if you guys are watching on replay, welcome. We just want to thank you for tuning in. It is a huge honor that you're spending time with us for an hour or so, however long this takes. But yeah, let's go ahead and get some more questions. Naomi is asking, do you do deal reviews? So we do deal reviews, but we can't go into full detail. It's just because full deal reviews sometimes will take an hour or two per deal. So we want to make sure that we give a fair time to everybody for asking questions. But the link that I had posted is for this talk about the mentorship to see if it's a good fit for you. It's not for deal reviews. All right, Mark. Do you want to Naomi, do you have a deal you want to review right now? We can skim over it and look at it. Go ahead and unmute yourself and we can talk about it.
I text you the link, by the way. for the group, just to
Oh,
your cell
okay.
phone.
Perfect.
Yeah, I was trying to put it into the here, but I'm on my laptop. So, anyways, yeah. So we do in a group calls. We do we always can. This is how the structure. I always tell people: get deals, go out there, talk to sellers, build relationships, bring the deals into the group, and we underwrite them. I tell them not to bring the address if you don't have that locked up, but bring all the details and numbers and all the information. So we do that as well. And then on Tuesdays is strictly deal analysis and deal structure Zoom call on Tuesdays. But any weekday calls like today, we do one at 5:30 Eastern Standard if everybody has one in there too. And then we also have a private Facebook group where people are posting scenarios and deals and we go over deals. And the reason why we like doing that in a group setting, because everybody can learn from it. So if somebody else has got a deal and you're watching it being structured, you can learn from it too. And then, oh yeah, I remember that one. Because we look at all the different structures, like how do we want to take it down? Are we going to do a subject to? Are we going to do an agreement for deed? What's our exit strategy? What's our cash flow? I always suggest more than one exit strategy, plan A, B, and C. Like I had this one kid in the group, really good kid. He was young, 22, 23 years old, and he was doing an Airbnb in Orlando. And we had it in a group, we were going through it. And for Airbnb, the numbers were great. Well, there, for me, I would pass on that deal because the long-term rental wouldn't cover it. And I told him, like, if it was me, I wouldn't touch this deal because I need plan B. He didn't listen to me. He went and purchased that deal. He did well for a little while. And now that Orlando market with Airbnb is oversaturated, he's coming out of pocket roughly anywhere between $400 to $600 a month currently right now because his long-term rental wouldn't cover it. So I tell people what I would do. It's always up to them if they want to take that deal down. And he still, I mean, it was a beautiful home, but what happened in the Orlando market with Airbnb, it just got oversaturated. Plus, I always look at certain areas, regulations, what's happening in Airbnb. The hotel industry is going around town, city by city, and trying to lobby the local politicians to outlaw Airbnb. So it happened in Daytona, it happened in New York City, it happened in a few different markets. So I always want to have backup plans. That's for me.
For
But if
sure.
you have a question on a deal, we can talk about it. I have no problem talking about it.
So this is a hey, this is a high no low equity deal. Those wouldn't fit in any of the scenarios you deal with, right?
Well, with like no equity in the properties, you're
Yeah,
saying?
yeah.
Oh yeah, those are great deals. I do those all the time because the seller a lot of times like expired listings.
Mhm.
I like those. I like it when I have realtors I work with that are rental realtors that were trying to sell it and they switch it to rental. Those are great ones. Because I'm willing to do, long as my cash flow is there, I'm looking for $500 a month. I'm willing to give them what the property is worth as long as they're willing to give me terms. And I'll do that all day long because I'm doing it based off of time, value, and money. But on that, I'm going to get in with very little money down. I may give them a little bit for moving. But those are great deals on seller financing because you're banking what that property is going to be worth at the end of your term, 5, 7, 10 years. So I'll do those all day long on those type of deals. I
So
just
I'm
look at
the
my
agent
cash flow.
on it. Um,
What's that?
I'm the agent on it actually.
Okay.
So um, it's a pre-foreclosure um, you know, situation 4 months behind. So catching up on the arrears is about 10% of the purchase price.
What's the purchase price?
Purchase price is like 370, 380.
Okay. And I'm assuming they've already gone through like a modification forbearance. I'm assuming they've already gone down that path.
Yeah, so it's a little sticky because it was subject to another investor who stopped making payments on it. So
Is that one that took down over 100 of them and stopped that one big? Yeah, it's sad.
no, it's just one person did just
Oh,
was in over her head and had
yeah.
a family situation, so she wasn't able to keep up. She had a loss in
Got it.
her family. So,
Got it.
um,
So,
mhm,
I mean, you could find a buyer out there and bring it current. Um,
yeah.
you know, what you got to look at the cash flow though. What would the cash flow be monthly? Like, do you have an idea what the current mortgage payment is? Is there HOA compared to the
Yeah.
market rents?
So, mortgage is 26, like 2650. HOA is like 430 a year. Um, yeah, rent is kind of aligned with that payment.
Okay.
So that's the thing. It's like not much wiggle
What
room there.
what? Yeah. So you as a realtor, if you understand these strategies, you can go out there and find your homestead buyer, put in the property, make your commission. You just want to find somebody that has roughly 60,000. So you said three something. They're out there. I mean, and they also can, if they have an IRA or a 401k, they can borrow, you can use that too to buy a home. So what I would recommend is have a relationship with a loan officer and take their turn downs, and you can create a little niche for yourself, and something like that. You're right at that borderline, like, where the rears, for me, probably right there is my threshold. I wouldn't probably go any more than that, because for me as an investor, that's 50, $60,000. I can deploy that into about 3 to 4 assets.
That's
But
what I was
from a
thinking.
homestead buyer, then that would make sense that you're helping them out as a realtor, you're helping the seller out, and creating it. And then what I would recommend is putting that property into a trust. So it looks like it's done for a state. It doesn't stop it, but it helps camouflages the due on sales clause on it.
Yeah, it's currently in a trust.
Okay.
So
Yeah.
they did that part.
Um,
She just wasn't able to keep up.
so
She wasn't able to rent
the
it. They lost that homestead credit. So it increased the taxes. So yeah, a homestead person would be ideal to move in. It's just, structuring it. Um, you
Yep.
know, yeah.
People don't realize that when they're doing these deals, when they're treating it as like an investment, your taxes are going to jump. I had one reset and
Yeah.
the payment went up over $700 a month.
Yeah.
Thank God I had some good cash flow. So people look at the seller when they're analyzing deals, they're looking at the current taxes. You have to look at what the taxes, and especially if it's homestead and it's not going to be homestead. So you have to be really cautious, especially if you're doing some. That's why sometimes agreements for deed of land contracts are nice, because it doesn't show it's being transferred. It sits in escrow. That way I structure mine at least.
Mm.
Um, but what state is that in?
South Carolina.
Okay. What I would do is just start reaching out, trying to find a buyer that would want to do as a homestead, and try to find that down payment that will bring the mortgage current, and pay your realtor fees and other realtor fees and
Okay.
closing costs. That's what, make sure they have enough there. And then you still need to make sure that you're running them through an RMLO to make sure, because you don't want to be back in the same situation with the next buyer and have them default.
And that was the problem. The original, I wasn't involved in the previous transaction, but RMLO was not involved, and a little research was not done on that person. So
Yep.
I'll
So
just leave it
typically,
at
yeah.
that.
So was it a wholesale deal to an investor?
Yeah, it was a whole, what was it? A wholesale to an investor to another investor. Yeah, yeah.
That's why I never wholesale, like someone was asking. That's why I don't like to wholesale. I like to stay in it, because even though the contracts are good, you can still, that wholesaler still can get pulled into it, because they're the one that structured the deal. They're the one that went out and found the end buyer. If that
Yeah.
seller went and got an attorney, and that attorney started poking around, that attorney could go after everybody involved. Um, so that's me. I like to stay in my deals and make sure, like, I'm putting underwriting it and putting a good buyer in the property for this exact situation. So the subject to default rate right now is jumped up to 19%.
Mm.
It's never, ever, ever been this much in history. It's always been below Fannie Mae and Freddie Mac, because it was always designed for us investors to stay in the middle. So if anything happens, we always making the payments. Well, right now they're all doing these assignments. So that's kind of why it was always, subject twos are always below, like FHA and VA default rate. It was always below it. Now it's the opposite, because these wholesalers are just looking for that assignment fee. I just want my assignment fee. I want to make my $10,000, $20,000, instead of in there just putting people in to these deals. And that's what I was asking, because one guy purchased over 100 of these deals as an investor and stopped paying all mortgages, took the buyers all down payments, and he put 2.8 million in his pocket, and now several states attorney generals are involved. So wholesalers were thinking they're out of they didn't think they're going to get pulled into it, but they're all getting pulled into it. So because they're the ones that structured it, so everybody's getting pulled into that mess. With that particular investor that just defaulted and just took the monies and just walked away. That's he'll probably do jail time on that one, because that's more criminal. Purposely stopped paying the seller, and kept collecting the payments from the buyers, or that he wrapped and took the money. So that one's gonna be an ugly situation. But this one, what you're saying and explaining, and I see this is typically most of them, they just got over their head. That's pretty much what happened. The investor got over the head on that one.
Yeah. Yeah, and
But
they're trying to rectify, they're trying to fix it.
I get
So
it.
I'm trying to
It's
help.
it's a tough situation. You're putting a seller's livelihood credit on the line. You know, it's just they're always saying oh, the seller would lose that home in the first place. A lot of times these people were never behind. They were just selling it because they couldn't sell it, and they got pitched by a wholesaler, and they weren't behind. But then you see these posts out there, oh, they would have gone for close. You don't know that. You know what I mean? But it's a great strategy, a great tool, and just make sure you're doing it correctly. And that's why I always talk about, you always want to have plan A, B, and C for this situation. So if something happens, um, typically, I always tell people what you want to do is, if you're an investor and you're stuck in this situation, before it keeps getting later, sell your deal. Give your deal to an experienced investor that can take over and be those mortgage current sooner than later. That's how the best way of getting. If you're listening right now and you're a wholesaler, or you're an investor and you did a deal and the deal's going bad, get another experienced investor to bring that mortgage current, and they'll take it over, because they know how to handle these things and how to fix the whole situation. Look for somebody that's been in it for 10, 15 years plus. They understand how to do that. If you're one of these people right now that are stuck where you did a wholesale deal and your buyer stopped defaulting, or if you're that person at the end, and you're struggling and you got over your head, take action sooner than later. Don't let it go for long. Get another experienced investor, have them bring the money, get that mortgage current as possible, and fix everything. And then you just walk away from that deal. Okay?
Thank you.
Pleasure.
Awesome. We got a couple minutes left. Real quick, I just want to drop the link one more time. If you want to learn more of how you can learn from Mark, Mark has over 30 years of experience now in seller financing, creative financing, whatever you want to call it. He has 30 years of experience, so you're learning from a pro. Mark, how many transactions have you done?
Well over 3,000.
Oh,
Well over that.
well
Easily.
over 3,000.
Residential, residential, commercial, land development, even businesses. Because once you understand these strategies, you can use them for anything. I like to teach people more in the residential because it's less moving parts and it's easier dealing directly with sellers. But once you have a good understanding of it, you can do it, like, especially commercial. I mean, in commercial, you can actually put money in your pocket on some of these closings. So
Yeah.
once you have a good understanding.
So, guys, if you guys want to learn more about his program, go ahead and schedule a call. There is no sales on the first call. It's just to see if it's a good fit for you. We want to make sure that we can service you and we can help you. There's some people that are at a point in life where they aren't ready for that yet, and they need to learn a little bit more. They need to save money for reserves, so on and so forth. So just schedule a call and we'll see if it's a good fit for you. You'll schedule a call with Alex or Reese. And then from there, you'll come talk to me, and we'll see if we can get you rocking and rolling. A lot of so a lot of you guys know, a lot of our typical members, they are investors that have 2 to 5 deals, maybe 10 deals, that are doing like a regular buy and hold strategy, that they just are tired of putting the 20% down over and over again, and that capital getting locked up. So if you are stuck doing that, and you are tired of doing that, and you are ready to get down, I mean, Mark he prefers 0% down most of the time, or 5% or less. So if you are ready to get to that spot, let us know, hop on a call, and we'll see if it's a good fit for you. But we also teach beginners too. We have people that are joining that are just beginning. We don't have per se the online course fully built out yet for just beginners, but it is coming. We are actually, once Mark gets back from Florida, he's going to sit down and record lots of content when it comes to that. So that's going to be exciting. So we'll see y'all soon. And Mark, I'm done with my spiel. So just schedule a call. That's all I got.
Well, guys, thanks so much. And thank you guys for joining. And we'll talk to you guys soon. And happy real estate hunting. Take
All
care,
right.
guys.
Thanks, everybody. See ya.